Dave Ramsey says that whole life insurance is terrible.
Whole life insurance, cash value life insurance is the payday lender of the middle class. I've been screwing the middle class for decades.
Krohn says that this is something that can actually be used to make you money.
I'm not just going to tell you what whole life insurance is. I'm going to show you how I've used it the last 15 years to make a lot of money.
The question is, who's right? We're going to get into that in a moment, but before we do, please make sure you hit the like button, hit the subscribe button, so you can come back for more videos. Let's start off with an example. There are two men. One is Homer Simpson. He's about 40 years old and he's looking for $250,000 of life insurance coverage. His wife asked him to do it.
I want you to buy some life insurance.
Homer, being the prudent financial person that he is, decides to buy a term policy. It's only $30 a month, and he needs to cover his family for the next 20 years until he reaches the age of 60. No problem. The next guy is Peter Griffin. He wants to make sure that his family is covered too for that same $250,000 of coverage. But he doesn't like the idea of getting nothing back in return after the end of that 20-year period. So Peter decides to sign up for whole life insurance. While Homer's is only $30.12 a month, Peter's is $440 a month. Now let's say, for example, Homer actually wants to make some money by the end of his insurance policy too. So he decides to invest the difference between Peter's premium and his own premium, which is approximately $410. By the end of that same 20-year period, Peter's getting back $110,955 and Homer is getting back a whopping $190,384. Case closed. Dave Ramsey is right. Buying term and investing the difference is the better solution.
Buying term life insurance for the $5 per 100 and doing almost anything else with the 95, but over in the investment world away from the insurance world.
Not so fast. There are some other factors that we need to consider before we close this case. And the first one is our behavior. We all know someone who anytime they get any kind of money, they stash it away, they save it, they invest it. They're really, really prudent when it comes to their finances. We also know someone who anytime money hits their hands, it goes out the door just as quickly and they end up spending it. And typically those two types of people end up marrying each other. And so for the person who is disciplined enough, buying term and investing in the difference is a fantastic strategy where you can actually accumulate more wealth over time. But for the person who money is like water, it just flows out of their hands the minute they get it, usually for them, some type of forced savings plan is a better option. These type of people work better when they have a forced contribution plan for their pension, where they have the Canada Pension Plan, where they're forced to pay into a mortgage, and so on and so forth. And so a whole life insurance policy for them at least is a way for them to be forced to save and invest over time, because without that, they wouldn't be doing anything. So getting $110,000 at the end of a 20-year period is far better than getting zero. So behavior is one major factor. Another thing that needs to be factored in is the situation. The situation that we just described are two people basically looking to cover a potential loss through life insurance, protecting their family, etc., etc. But what if we're talking about someone who's looking to actually use whole life insurance in a different way, using it as an investment, using it as a borrowing tool, using it in a different fashion? Well, in this case, whole life insurance can do a lot of things that term insurance can't do. There are specific strategies in there where you can actually use whole life insurance or permanent insurance to get money out of your business without paying any tax. There are ways that you can borrow from your whole life insurance policy or borrow from a bank and use that money to invest to generate additional wealth as well.
So I've been leveraging these kind of policies for years. And I've been basically dumping money into policies. And then as that money is built up, I'm pulling them out and using them for doing things like this.
And if you were to compare that to the minimal amount that Homer is putting aside time after time, whole life insurance can definitely amplify your returns in that way. So it really all boils down to, number one, behavior, number two, the situation, and number three, the goal. If the goal is simply to protect and try to create as much wealth as possible by simply saving and investing, buying term and investing the difference is probably the right way to go. But if the goal is to amplify wealth, it's to borrow, it's to use leverage, it's to use debt, different things like that. By the way, this is not something I'm condoning. It's just sharing that there is an option there that could potentially amplify your returns down the road. Whole life insurance might be the way to do it. And that is kind of what Chris Krohn is getting into. Overall, both of them have their merits. Both of them are things that can be beneficial, but it really needs to be broken down into what are you looking for? Are you someone who is disciplined enough to set money aside? Are you looking for some simplicity when it comes to your finances and investments? Buy term and invest the difference is kind of probably the right strategy for you. Are you someone who is freewheeling with your money and you don't have the discipline to set anything aside? Whole life insurance is probably right for you. Are you someone who's looking to save on taxes? Are you someone who's looking to borrow? Are you looking to take on a little bit more risk through your investing strategy to try to generate longer term wealth? Maybe whole life is right for you in that sense. At the end of the day, both of these strategies are something that we can look to and have their own benefits, but it really boils down to the individual. But if I had to take a vote, I would go with Dave Ramsey's strategy. It's closer to my values and beliefs. Jazakallah khair. Assalamu alaikum.